right? So here the solution is, we have a digital contracts. Digital contracts, it means future and options both comes under your digital contracts, and those contracts which are listed on a stock exchange, and you can easily buy and sell. So it is mandated to both the counterparts to buy and if you buy or if you sell, in both the cases it is mandated to pay some premium to avoid that risk. So what it means, so I'll walk you through one practical example so that you can understand it. So let's see, let me just log in my account if I can quickly. So here is my account. Let me log in this first. Yeah. So this is my account. Here you can go. Okay. So here if you see, broker also gave me the same pop-up that out of 10, 9 or something, only one is making profit and rest 9 people they're making losses from the this derivatives. All right. Anyways, so here you can see future and options. Both are listed on a stock exchange. We have discussed about underlying securities. Underlying securities, it means, as I said, it can be your bonds, equities, debentures, or any securities that or in interest payments and all. If you want to keep it as underlying, it means on the basis of that only you can sign derivative contracts. So without underlying securities, you cannot sign any derivatives contracts. All right. So let's say you have decided to enter in a contracts of let me just open one contract. Option chain. See, this is indices basically. Nifty it means index. Here if you see, current market price of index. What is the price? 23,465, which is current market price of the index. Let's say you have decided, right, or already let's say you have done some sort of research and you have decided to enter into option obligations. So let's say option obligations, it means it can be put or it can be call, or you can also buy futures as well. Futures, it means futures again which offers more flexibility, but you required a decent amount. We'll see that. Means practically if I walk you through, then you might understand it, because this derivatives topic, which is not for a theoretical discussion, right, and no one can understand this derivatives in a practical way if I only walk you through the definition types or the basic stuff. And that's what we have directly started, because I started to narrating deep dive some examples and all with derivatives part. So let's say we were talking about underlying assets or base asset, which was Nifty. So current market price of Nifty is 23,465. So here you have two options. So see that means how your basically derivative options works. So under Nifty, different the price, which is strike price, it means this price. See, you can buy Nifty in the difference of 50 only. Let's say 22,750 you can buy. Then after that you can buy 22,800. Then 22,850. So it means you would see difference of 50. Right? You can buy options with the difference of 50. So let's talk about current market price. Current market price, which is at this level. So I hope you guys is able to see my screen. Let me just zoom in a little bit. See the current market price. Current market price of the same Nifty is this one. All right. Now, which one that I can buy? So it means whether I should buy, let's say, long or short. But how I can decide that? How can I, come to that conclusion? Look, I want to buy call, I want to put call, or I want to, let's say, buy future. How can I do this? So simply see, you can perform then research, your research, own research, and for options, you can see, the political news also matter a lot, because on a election date we have seen the huge that movement or volatility, I would say, in options market. If you see the index directly from 20, if you see the price, it's a device. If you see the price which was down from almost this point to this one, so here if you just calculate, market open at 2,3,200,
Recording in progress.
So can you see this, guys? Am I audible? Because again and again I'm facing some issues with my net, and due to some bad weather, I don't know how I can fix this, but I'll try my level best to explain. So continuously that I'm seeing that network is okay. So let's say on election date what happened. So if you see the price change, price open at 23,200 something, and the lowest mark that we have seen, lowest, it means price which was low at this level. See the lowest mark also that you have it. So almost 21,200 it means. So around something somewhere 2,000 something points that we have seen huge movement in Nifty, and this never done before. Right, and we haven't in my career also, means I'm into this derivative market since last 10 years, not as an active trader, but frequently that we visit this market, see the charts, but I haven't seen such a movement like this. So in a Nifty there was a movement of 2,000 points. See in a bank Nifty frequently that you would see movement of 1,000 points, 2,000 points, even up to 3,000 points. But in bank Nifty also there was a movement of around 10,000 points something. So it was a huge volatility that we have seen on that particular date. So here the point is how you can do some research. Let's say the market already triggered, which is hammer. All right, this is a hammer. Let's say if you would have carried any position, I had holded position, but it was very small quantity, only 2 lots that I had purchased, because there was a hammer at top. Right, on the basis of this technical research, let's say if you would have buy any put option, because if you see hammer at top, it means you might say, again this research is not 100% true, everything is based on some technical technical analysis, but that analysis never prove it that your research will goes right or wrong. It is just on the basis of past studies that you can take some decisions. So again on the basis of that only I had decided to go ahead with 1 lot or 2 lots. So I purchased 2 lots of this. So in the first 5 minutes only I had a profit of 22,000 in my 1 lot. So I made a profit of around 44,000 in just 5 minutes. Why? Because when market opened, suddenly market down like this. It was a huge downfall. So within just couple of hours, the market reached to the 21,200 points. And when the market, let's say, got some confidence that look, the NDA government is going to get majority, then very next day, if you see the market, which is open at this level and made a high of almost 22,600. So again, we have seen huge recovery, and within 3 to 4 days, if you see, market made again another high. If you see market, which is at higher side, and I'm sure this break, this will reach to the 24,000 in next 2 to 3 days. That you can go and check. Again, it's a possibility. But what if, let's say, on the basis of chart, we can predict market may reach to the another level, high level. But what if, let's say, something which has been done in the international market, let's say America decided to declare war against any country, then you might see huge volatility again in the market, and market may goes down. Then even if you, let's say, studied well and purchased some option trades, your research will prove it wrong. Why? Because of something happened in overnight, and then that is not something in your control to protect, and you may lose your money in option market. So same thing which happened on a date of, which is political exit poll that comes out in India. If you see sudden spike, how that market were reacted, you can see that data also. The market closing price was, see this, 22,400. Market close, it means previous day when the before the exit poll date, the closing price of market was 22,400. This is the price, guys, current market price. But market when open on next date, market open at almost 23,200. 23,200. See this, it's a gap up opening. So in this case, let's say if you would have carried a position in maybe future or options, you would have made huge profit. It means for per lot at least 40 to 50,000 profit that you would have made, because thousands of people, they made a huge losses on that particular date, and thousands of people even they have made a huge profit also on that particular date, because 2 days were very crucial. So everyone, means buyer, seller, they have made a huge profit. All right, so this is how you basically research works. See, this research, you may have a different opinion, I may have a different opinion. Why market will crash? See, most of the people, they were thinking about NDA government will not reach to the majority, and as per, let's say, market or smart investor, they thought like this, government, let's say, government will establish government in a coalition, because they have a majority 240, which is huge number. And if alone party, if that party is having 240 seats in Lok Sabha, it means it's evident that this government will form the claim the majority, and they can arrange support from the alliances and all. It's a possible thing. And when the smart investor got to know that, look, BJP has some the big number, so that they can, means with their alliances they can form a government, then very next day, if you see, market started making upward trend. So this is how basically market works. And when the market got to know that very in morning, that BJP, because they had only 150, 60, 70 seats, and again new channels also, they some make some or declare some number incorrect numbers and all. So when they, means traders, or let's say investors, or maybe in other participants or speculator, they got to know that maybe in the alliance also, if the BJP's this 240 number goes down like 200 or 190 something, so it might affect, and they'll not form the government, and they started selling. So they were panic, and here if you see, it was total panic sale. And this sale also, which is not in your control, right? You cannot control that, all that other things, guys. Those are uncontrollable factors. Sometime you can control it, sometime you cannot control it, but again, on the basis of your research, you can conclude whether you can buy a put option or call option. Now, if you see, if you ask me, what would you do, sir? Let's say you have decided to, make some, let's say you have decided to enter in any contract. So now currently, if you see, now current price of Nifty, if you see, which is at this one, this level. Now let's talk about some current, things. What would be your opinion? And if you ask my opinion, again, this seems, like hammer, but it's not an actual hammer. You can say this one something, when you see, such a candle at top. So if you see here also, if you see such a candle, so it means you might see upward movement, right? You might see upward movement. So it's just prediction, and I'm thinking like same, if something, candle that we have like this, then you might see this Nifty will break the level. Break the level, it means now if I put it into this, see that if you see, if I put it in a weekly wise, see, weekly wise the trend is, which is upward trend. Every time this Nifty has achieved the mark of, high mark, if I put it this into the trend, all right, same line if I also draw here as also what the weekly trend says. Even if I talk about, the market crash, this crash was also in line, guys. This crash was also in line of trend. All right. So this trend, that market crash wasn't out of the trend. If you see weekly trend, or if I increase this trend from here to, let's say, somewhere this, and this also, if I increase the label, see, continuously market has an upward direction, upward trend. So on the basis of this, if you ask me what will happen, so might be market which is touching to this upper side, so it may break down this level, and if this breakdown, it may reach to the 24,000, which is early target would be 24,000. All right. And what if, sir, what if the market goes down? So you might see, this level, another level market can reach or drop at this level also, here somewhere, which would be around 22,800 or 900 something. And maybe from here you can see another jump. So this is how market works, guys. And this process will take time. Maybe let's say 1 month, 2 months, 3 months, 1 week, 2 weeks, 3 weeks. So depends. So this is shows your time. This box which indicate about time. So how much time it will take to reach to that level, or how much fluctuations that you would expect. 1, 2, 3, 4, 5, 6, 7, 8 fluctuations also that you would expect. And if you see now, what would be my, let's say, opinion about this level. See, on the basis of this one, I can buy call option. I can buy call option of 2,300 450 level, and this would be my in the money ITM, because current market price is 465 and I'm looking for 23,450. So my option would be ITM. Sir, what is this ITM? So which is label, guys. It's a if you just ask me to elaborate this, what is ITM? ITM, it means which is in the money. If you see my current market price, which is at 23,465. So current market price is higher, correct? Current market price is higher, but I want to buy this price, which is 23,450. So why, sir, you will buy this one? If I buy this one, my premium price movement would be very high. So my chances of making profit would be again high. And that's what I would always prefer. If I want to go ahead with call option, So always I would prefer to buy options, which is in the money options. Even you can try to buy ATM, which is at the money, but the current market price at the money, it means current market price and strike price both would be equal. That would be your ATM. ATM it means, which is not automatic teller machine, which is at the money. At the money it means current market price of options, which is this one, which is in front of your eyes, and the strike price which is not available, but if you want to buy the same, which is call option, that becomes your ATM. But what if, let's say, current market price, which is this one, and strike price that I want to buy, which is 23,450. So this has become ITM, in the money option. And let's talk about current market price. If I, let's say, which is current market price, which is higher, all right, then if you compare with the strike price, and let's say a strike price which is at 23 800 somewhere, then this is becomes your out the money. So if you see out the money, here your premium would be low. I'll show you on a chart as well. Here your premium would be like moderate level, because both price are at same, and in the money you will have to pay high premium. It's like, guys, here aeroplane tickets. For example, let's say you have a two option. One is economy and another one is VIP class or business class. In business class you would see high facilities, but you again your payment would be, means ticket charges also would be high, all right. And if you pay, let's say, economic class fees, so you will get common seat with less facilities. That's the difference. When we talk about ITM, you are paying actually high money to make more profit. And if we talk about, let's say, ITM, it's economic class ticket, you are paying low fees to make again low you can say profit. And if you talk about moderate, it seems like you are not ready to pay higher fees, so your just approach is like moderate amount that you want to pay, and your expectation are also same. And if you talk about the volatility, you would see very low volatility or speed. Volatility, it means speed, guys. Speed would be very low in this option, and here you can see medium level of speed, and here would be very high speed. So high speed, it means whatever premium that you have paid, you would see very high volatility in this way, up down up down up down. And here the same volatility, if you see, it would be like this. So if you understand this, let's say take an example of car, all right. If you drive car, let's say you have your own car. To understand this premium, you have your car. Let's say if you drive your car with a 20 km/h speed, what will happen? Fuel consumption would be high. Am I right? And same car, if you drive at, let's say, 100 km/h with the same fuel consumption, correct? Again, fuel would be high, but with the same fuel consumption, here maybe you can travel only let's say 20 km max to max, and here you can travel 100 km with less time, correct? With less time. If I talk about, let's say, 100 km, here we required 100 minutes, and here we required almost how much? 100 plus 100 plus 100 plus 100. So we required 500 minutes. And if we calculate, let's say, this time and everything with the cost, so your fuel cost would be high, your time, which is required very lengthy time, and if you travel more, again, your vehicle that cost also, it will increase automatically. So same logic, if you apply it in option market, you can easily understand it. If we talk about in the money, that will give you are paying of course you are paying premium, but your speed of making profit would be very high. Even same applies to the loss as well. Maybe you would see profit and loss, that frequency would be very high. If we talk about at the money, you don't have much expectation, maybe from upside or downside expectation, and you are looking for a moderate level of profit. And if we talk about out the money, your approach is like you are not ready to spend more amount on options. You have a very low budget and you are looking for a low budget options. If you are looking for a low budget options, you can your profit probability also would be very low. Let me tell you now interesting fact. 99% people, they make they make a huge losses in OTM, out the money options. Why? Because their approach would be something where they want more quantities, and if we target to the more quantities, your profit possibility would be very low, but you are still paying huge charges if you compare to the out the money, and that will lead to the huge losses. 98% traders, they are making generating more losses in out the money options only. And let me tell you the interesting fact. If we talk about option holders, 90% option holders, they are making huge profit in OTM options only. They are making huge profit in OTM options only. Sir, how they make a profit? Let's say to understand that one again, I'll elaborate it. At this point in time, let's say here is the point and the Nifty which is at 1500, correct? So you are saying that your vehicle can reach to the this level which is 23,406.5. Your vehicle can reach to this distance in, let's say, 5 months. So bet is this is the level, let's say this one is the level, but your vehicle should reach in only 5 months. So you have paid basically as a betting amount, let's say as a betting amount, you have paid charges which is 50,000. So if I divide this 50,000 in 5 months, it would be around 10,000 charges you are paying every month. Let's say your vehicle, this vehicle, drive in this way, and it takes, let's say after 5 months also you are at this level, and unfortunately you couldn't reach to this level, then entire money goes to the writer. Why? Because you had already committed that your vehicle will reach to this level, and if this happened, then you will end up with time value and additional cost, because already you had covered the 50 to 70%, let's say, distance, but again you will have to take a reverse, come to the base location, and you will end up with huge losses. It means your loss would be around 50,000, whatever that you have paid. All right. And same guy who had, let's say, accepted your promise, look, if you reach to this level, then this guy will pay you whatever that the, let's say, the promise amount was, or maybe difference of, let's say 1500 to 23, let's say 1000. So it would be around, let's assume it around 8,000. Let's say the promise was made for 10 quantities, or let's say 20 quantities. So it would be around 1,60,000. And if you, let's say, actually reach to this level, then this guy, means whosoever made a promise with you, this guy will make a return to you, which is your own deposit, which is 50 plus your profit 1,60,000, that it will receive to you. But guys, see that, first understand this, to drive car in this way, so it's a huge risky. You will have to ensure that you have ample amount of speed that you have maintained, because you would see fluctuations, right? See this fluctuations, that every fluctuations will consume more money. because here we are paying premium. Premium, it means, let's say if you want to buy options for 5 days, 5 days, correct, and let's say you are paying premium of 40 divided by 5, how much would be the amount? Let's say 8, right? So every day you are paying 8 rupees. Why? You are paying every day 8 rupees as a cost, correct? And if you see more fluctuations like this, so you believe, right? If let's say you are walking up like this, you are reaching to this level, and again you are coming down, correct? If you are coming down like this, and again you are walking somewhere, let's say here, so if you see, actually you're consuming more time to reach to the next level, guys. Let's say this time took 5 days, this time also took, coming down, let's say it took again 2 days, and again reach to this level it requires 3 days, right? And then again required here 2 days to reach to the another level. So see, the calculate time, right? Calculate efforts, correct? Calculate efforts, calculate everything. This walking process, it's a very difficult to walk within time and reach to this different level along with the fluctuations. And that's when, if you see, if you buy, let's say, out the money option, so it means this process, it's a very hectic process. So what you are believing that, look, I want to walk, but I want to take a break, I want to take a rest, and again I would like to walk. And this process, which comes under your out the money, and here you are paying very low fees, right? You are paying very low fees because you have entire that the distance to walk. But if I talk about, let's say, same, if I talk about in the money, in case of in the money, price which is at this level, but this guy is purchasing here somewhere something. Even if this comes at a reverse, you would see low speed, right? And again, if this guy is, let's say, walk, so it means already you are in the money, then again you would be in profit if this price touch to this level. So it means after here you can start making profit in the money options. So it means while selecting options, we always select in the money. But let me tell you, people who are novice, they always select out the money. And like very professional one, they play around ITM, ATM, depends. Okay. So this OTM, ITM. Now let's take the example here and see, not in how you can select that and buy, and what will happen if you select OTM. So I'll just help you to calculate that. Directly go in options now. Here. Oops, what happened? I'll have to re-log in basically. So we have an option here. I'm not holding any positions, but I have made a losses also. Yesterday I made a loss of 2000 something. Profit and loss that I have made anyways. So you can go to the watch list, come to the option chain. As I said, on the basis of this data, I would prefer to check this one. Now let's say I have options to sell, I have options to buy. If I buy call, as I said, I look for a long. It means I'm a bullish that market will go up. If I select this one, see the premium, guys. If I want to buy for one lot, we can buy in one lot. In one lot, there would be around 25 quantities. If you want to buy multiple, just click on multiple. See, I'll buy only 25 quantities, and the margin which is required, I'll have to pay 28.52. What if, let's say, if I let's say that price actually market goes down, and then because my expectation was market will go up, but that market, let's say, reversed and goes against in my decision, then what will happen? See, maximum loss that I would make or incurred from this option would be 2852, maximum loss for me as a holder, because I'm a buyer, right? But if we talk about my maximum profit, how much that I can make it, my maximum profit would be here. Maximum profit I can make it from this contract is 64,575. We'll call it as unlimited because we don't know the market circumstances. But when we say unlimited, it means of course you can draw some line. So my profit that I can make it on that investment. So probability of profit is 64,000. Maybe let's say when you have made profit of 5,000, you can take a exit, because exit is not something restricted. You can take a exit at any point in time. So you don't have any restriction basically on exit point. You can take a exit. All right. See the difference, right? At same price, if I sell it out, the same option means call option. If I sell it, then I will have to pay 64,000. If you divide the 64,000 to compute the price per quantity, you have a quantity of 25. So let's compute it. 64,572 divided by 25. Calculate it. So calculate and tell me how much would be the amount. So it goes around somewhere. Let me just calculate. 64,572. It goes around 25,882 rupees something. So here, if you see, for the same quantities, guys, you are paying almost 25,882, or there would be in points as well. If you sell it, same option. Right? And if I talk about, let's say, buying option, if you want to buy it, for a buying you are paying just, see that you can calculate it. You have quantities in place, 2852 divided by 25. So you are paying somewhere around 114.10. Are you getting my point? So if you want to buy, your premium would be very low, but if you want to sell it out, same option, you will have to make a huge payment. And that's the problem is here. Retail people, they can't afford it. Retail people can't afford to write options. Right? It means you are paying full amount, but your profit chances would be high. If we talk about option holder, you are paying low amount, your profit possibility would be very low. Your profit possibility would be very low. So this is how you can differentiate your options. And if I now, let's say if I decided to buy it, again here you can see two options. See, this option is listed on a market. This option which is listed on market, it means NSE, BSE, basically on NSE all the options are listed. So market these options which are listed on NSE, you can select two different prices. One is normal price, another one is stop loss price. Stop loss price, it means if let's say this options goes down, so here you can select the price, maybe at 100, this contract will execute, or maybe you can select any price, just your price if you don't want more risk, because as I said, maximum loss would be this. But if you don't want to, let's say, take a more risk, then you can restrict your options from the market uncertainties, and you can select stop loss. All right. So now let's talk about limit and market price. If you select the limit price, market price, it means, see, I would not recommend to select market price while buying if you are investor or trader. The reason is, if you send buy request, see, always market system will try to execute your trades at a very highest price. And as a buyer, we always, try to pay low price. And my recommendation also would be the same, because if you want to buy anything, always try to pay lower fees. And that's when you should restrict it. If you ask me, sir, how will you, restrict? See, market is off, so it will not allow to, put limit order. But if the current market price is 140, then I'll add, I'll update price which is 100, because I'm ready to pay only 100 for this particular option for per price, and I'll execute it. If I want to, let's say, add a stop loss, I can add stop loss also, but I don't want to add any stop loss at the moment, because market is closed, so it will not work. All right, and then directly I'll place the order. I'll just update my price, limit price, which is 100, and I'll buy it. I don't have a fund available in my account, so it will take time basically to execute the trade. But this is how I can manage my options. And if I buy it, once you buy it, you can check that in your portfolio here, so it will reflect, and then you can compute whatever price that is change, if you see. But again, on other hand, if you want to, let's say, same option, if you want to, let's say, if you are interested in put it means your assumption is says market will go down, right? You are assuming this market will go down like this, then you can buy put option. If you buy put option, you can simply select this one, put option, and buy it. So see the difference. You are paying same premium, which is at 105, and you can click on buy. If market goes down, then you will make a profit from put options, and if market goes up, you can make a profit from the call option. So this is how basically we compute the options and then enter into it. But if we talk about, let's say, see, for the same options, guys, see the change in price. Current market price, which is 23,465, and if I, let's say, come down, and if I select this one, I will have to pay more premium. If you see the premium, see, I'll have to pay 17,000 for same 25 quantities. Why? Because my strike price, which is in it means market price, let's say 23,400 somewhere, and I'm looking for 22,750. If I come down, let's say, like this, then I'll have to pay more premium. But if I, let's say, above the market price, here if you see, let's say current market price, which is at 23,465, and if I select 24,000, or maybe let's say this one 24,200 or something, if you see, you are paying only premium of 40. The very talented people on this earth, what they believe, let's say if you have a 5,000, what you can do, you can pay 5,000, look, you can buy 500 quantities. Even if you buy 500 quantities, you are paying only 800. What they believe, if they buy 2,000 quantities, or let's say 5,000 quantities of this option, they are just paying 8,000, all right, amount, and maximum loss would be 8,000. But what if, sir, because they even explain this, what if, sir, if this price, let's say, change from 1.6 to, let's say, 3.5 only, then still I will have a profit of 10,000, right? See this, I will make profit of 10,000, and it will easily happen. But as I said, it will not happen easily. The reason is, go and check it. You would see continuously, price fall in this particular option. The reason is, this option, I give you the example of, car, right? If you have a long distance, and if you have a low time to cover, or less time to cover that distance, you will have to increase your speed. But what if, let's say, there is no speed, means maintain speed, maybe 100 km per hour or 200 km per hour, and let's say there is no traffic. In that case, you might see that car will reach on time. But if you see high traffic or other challenges, fuel and all other things, then you might see driver, it will not reach there on time. and if this happened, then you'll lose everything. And here in this options also, if you are paying low premium, it means the possibility of reaching to the strike price, which is very low. If I select this price, the possibility of reaching to this level is very low. And if I still try to buy it, you can buy it anyways, you don't have any restriction, you can buy it, but your profit possibility would be very low, guys. The professional traders, what they do, if we talk about out the money, let's say I know it that market will not let's say cross 24,000 mark in next 1 week, then what I'll do some analysis, then I'll try to sell this particular stock. If I sell this stock, how much I will have to pay? 52,000 that I will have to pay, but my profit would be very low, profit possibility would be very low, because my maximum profit would be 70 rupees. But for a 78 rupees, why should I enter in this particular contract? My maximum loss, you can see 52,000, and I will have only I'll make 78. So what I'll do, I'll prefer some decent options which can help me to make some more money. So let's say this one, 1200 rupees. But what if I increase the quantity of, okay, maximum 1800 it is allowing. If I place the trade for 1800, see my profit percentage would be 89,000. But if I sell this one, the huge investment is required. 43,90,000 which is required if I sell this option. Who can sell this option then? If you have, let's say, huge amount, minimum, if you want to, let's say, even go ahead with 25, so you can go ahead, which is fine. But for a 25 also you require 60,000. So 60,000 if you have in your pocket, then you can go ahead. If you don't have, let's say, 65,000, and if you have only 1200, then you can buy this options, and that's when the problem it starts. Most of the people, they have a budget of 5,000, 6,000, 7,000, 10,000, and they believe that they can easily make money with that amount. Now you tell me, if everyone is making money with 5,000 rupees profit, then Adani, Ambani, they would have made more profit because they have a huge money, right? Adani would have invested 10,000 crore in option market. Ambani would have invested 10,000 crore in option market and make huge profit. So ultimately there is no profit, right? It's a trap for us. It means you would see huge obligations and factors which affects on the speed of this market. And if the speed, let's say not maintained in the market, then you might see effects on the options which you have selected, and then it will start, you will start making losses from the same options. That's the problem, guys. All right, I'll show you my statement also, then we'll take a break. Here is my we'll directly go to the statements. Let's say portfolio. If I talk about, I'll select only June. I'll select only June. So how much profit that I have made in the month of June? Only 40,000, 41,000 that I have made it. Why? Because see, if you see the fluctuations, I have made a profit of 18,000, 9,000, 8,000, right? You can see, but at the same time, I have losses as well. If you see 4,000, 4,000, 7,000, so I have a losses also. Then see this. So it means this derivative markets that never offer consistent return. I have 5,000 profit, 5,000 profit, 5,000, 2,000, but here also I have again loss, which is 2,000. So means continuously you can see on 13th, if you see I have put trades, but most of my trades, if you see, I have closed in loss, 5,000, then again 200, 1,500, 200, because the movement in the market was very low, and most of the losses that I have made in Nifty only. But at the same time, if you see on 6th of June that I made, put some trades on 6th of June, if you see the profit, 18,000, losses also I have 4,000, 4,000, profit 9,000, 7,000 loss, again 3,000, 2000. See the frequency, guys. But at the end, I had closed, in profit. And if you see gross calculation of, in the June month only, I have, means again, June is at 2 hour, but I have made profit of only 40,000, right? So this is how option trades that works. And why we talk about volatility, it means it's not easy to calculate everything at the same time while selecting options, because you will have very low time to take a decision whether you should buy or sell, and that things makes actually difficult, traders. And that's what I was talking about, infrastructure. If you don't have an infrastructure which can help you to compute, which option that you can buy, which option that you can sell, right? If you don't have an infrastructure, then you cannot take a decision quickly, and in option market, as I said, you'll have very less time to take a decision. And if you don't have a time, then anyways you will end up with money. Opus trust something. Straw. So here you can try to exercise your trades as much as you can. It's a highly recommended site for freshers. I would not recommend any plans or something that you can take it, but basic plans which are always available. So you can take a plans, and here you can see more analysis, or even in easy way also. So I'll just walk you through quickly whatever discussion that we have discussed now, how it works and what happened. Authentication is failed. See, these are the options. I have logged in now. Am I logged in? Yes, I have logged in. So select the options, any options that you want to select, and go ahead with this strategy. I don't want to pay any premium at the moment. Okay, it is not allowing me to do so, but you can try it on your own. Basic plan means without paying any amount you can take it. So here basically you can build your strategies. It allows you to build your strategies through different options. This data is very important, guys. As I said, if you don't have a system, then you cannot make a profit. If you want to even buy any stocks, you can you can see and first go through it, spend some time, and on the basis of this you can design strategies around it, maybe for a stocks, options, futures, right? You can decide your strategies, bull, put, call, whatever that you want to decide, and then see how you can, or which lots or how much lots that you want to buy, and accordingly you can build your strategies, and the strategies will help you to actually make some profit. Now if you ask me, sir, do you refer this? To be very honest, I don't have time, because my most of the time that I spend in trainings, reading books or research and all of other things, and that option trades I have placed, whenever I get some time, I just visit market and place trades, because I'm not an active trader. I'm an active option, not option buyer, but I believe in positioning. I refer the this data, FII data, or this information, and this information help me to buy or take a position in market. All right. So if you see on 14 June also there was a buy from, it means most of the buy which has happened from the FIIs. FII, it means foreign institutional investors. If they buy, then you would see positive impact, and if they sell, it means you would see again negative impact. But in the year, if you see 82,000 crores rupees that FII invested, and in 23 almost 1,68,000 crores FIIs invested. So it means this is a clear indication, guys. FII, see this continuously they are investing since 2009. In 2000 investment amount it was very low, but if you see continuously they are investing. Even if you see the government of, let's say, NDA governments, or any government, Congress government, FIIs continuously they are investing in Indian market. This is the data. In 2014 they have invested 36,000 crore. When the Modi government come into picture, then they invested 47, but continuously we have seen growth 82. In 2020, due to pandemic, most of the money which was sold out, and we have seen some market crashed and all other pandemic issues and all. In 21-22, it was a tough for every market, and after this, then in 2013, it was a clear indication. See, FI as their big player, they know it which government will come into picture. They know it, guys, very clearly, and that's when they have. If you see, they have started huge buying, 1,68,000 crore. We have never seen this level of buying in the history. After the 2009, which is global, pandemic, not pandemic, sorry, global, market crash, or let's say that recession, huge buying which has been done in 2023, but we haven't checked the report, and we still, predicted like, this happened or that happened, because they were sure about this government, it will continue. And even in 2024 also they have, huge purchase at 82,000 crore. It's a big number. Means after 2019 they have directly purchased this amount, which is 82,000, and so far they haven't withdrawn any amount. Only withdrawal happened in 2022. See this. This is the data. So I checked this data for my knowledge purpose, and on the basis of that, I don't have a big portfolio, to be very honest. I don't want to make any fake impression. I have 4 different accounts, and this is my one of the accounts. So in this account, I'll just disclose this data, just for knowledge purpose, how I buy it. I am a trader, so this is my portfolio. So I have a huge positions worth of rupees almost 10 lakhs, because my few positions, which is Tata Power, Geo Finance, I'm in a loss, and again Jammu Kashmir Bank, which is with a low loss. But most of my positions, if you see, I have a profit. With most my total net profit that you would see, which is 41,000, that even if I sell it today, I'll make a profit of entire positions. If I sell it out, then I can make a profit of 41,000. All right. And if I talk about demat holding or portfolio, so portfolio, not demat holding. So average profit that I have, which is only 22,000, but most of the profit, I'm a person like I always book the profit. I don't believe on long term things, right? What will happen in long term, we never know. So why should I wait for long term? So I don't believe on this. So now I'll walk you through quickly profit and loss in last 3 to 4 months, so that you can have in a number in place. See, this is my profit which I have generated in only 2024, from first of April to till today. Current day's profit means it's a realized profit. Right, realized profit that I have made is 1,31,442. And if you talk about derivatives, let's calculate this. Only 11,000, because previously we had made some losses, but in the month of June that I have recovered it everything. Otherwise, I was in loss of almost 40,000 in derivative market. So, but now I have. Means total, if you calculate my entire P&L for this 4 months, I am in a profit of only 11,000, and this 11,000 and this one, so which is around at 1,50,000, which profit I have made from the stock market, and this is the real data. Again, if we talk about last year, how much? Last year it was very tough for me, because the time and everything, so I couldn't manage. But again, still I have made a profit. Gross profit I made of 2 lakhs, right? And net profit, if you calculate, which is at 18,000. So total profit, net profit I made around only 182,000. Again, if you go back and to see in 2021 and 22, only few trades which was made, but it was a loss of 14,000. This one in 21-22 made a loss of 23, 21 profit, it was their profit of only 10,000 profit. So if you just calculate my average, it would be high, but just because of the data is front of you, just because of positioning and just because of holding that I have positions, I continuously frequently roll over the positions. Now if you see, I'll sell out some defense stocks in next 2 weeks. My target is with this, it was 4,000 and it was reached. So I have a profit of 18,000. Then I'll execute this trade. Means I'll take an exit from this particular trade. Let's say if I talk about RVNL, I'm targeting 400 price, which is current market price, which is 390. If I reach to the, let's say 400, I'll take the exit from this particular position. So because always I set a target and make some profit. But if with the derivatives, we can't predict, guys. Even after doing lots of research, we can't predict anything. Anything can happen. So as I said, most of the people, they have lost everything in out the money options. And there are other people as well who make a profit from the out the money options only, which would be your option writers. Who sell the options, those people would be writers. Who buy the options, those would be your option holders. So anyways, we'll take a break here for 20 to 25 minutes. So we can have then, means you guys can have dinner or whatever that you want to do. So take a break. After the break, we'll connect and then I'll walk you through PPT or presentation that we have around this options and derivatives and all. All right. So any questions before going on a break? If you have, you can text me quickly here. So I'll address your question also. Derivatives is one of the complex topic, guys, but I'm trying my level best to give you easy examples or even real data so that you can understand it. How was the session so far? Come on, guys, how was the session? Derivatives is one of the complex topic. One of the complex, it means one of the complex. Maybe that PPT, when we'll walk through PPT, you might understand this. But if anyone want to get pro into all of this, I have already give you some recommendations. Here you can try with this one. See how it works, pattern and everything, right? Options part. There are strategies you can build your strategies. You can build your portfolio, whatever that you want to do, you can do with that. And this means Opstra site will help you to understand options in a very detailed way. But again, it's not something one day journey. You will have to spend at least 1 year to get pro into these options. It's not something that I'll attend one session and then I'll get it done. No. If you are really interested in option trading, right, you can connect me personally. I'll give you some different things and you can practice it out. If anyone has here who has a capital of 1 lakh, that person can also text me. The reason is, without capital you cannot buy and sell in options, and even theory also you cannot understand much, because in an interview they'll ask you practical questions. So practical question, it means they'll give you example how we can calculate premium, how we can calculate price, what would be my loss, let's say price reached to this, from this level to that level. And we have discussed that examples previously. Beginning in the beginning we have discussed the same sort of things. And in an interview also you might say same questions, because nowadays nobody is interested to ask questions to you. Look, tell me what is the definition of options. If someone is asking, it means nothing wrong, but on the basis of, because I'm also because in my organization HR always call me out for an interview, so we ask practical questions like this. Tell me how you can hedge your portfolio, tell me how you can, let's say, compute price of options, let's say how you can decide which option that you can target. Are you getting my point? So you should know that. Anyways, we'll discuss that more things after the break. Let's take a break of 20, so we'll connect at dot 10:20 or 25 max to max, that I can extend it, guys. If you guys are agree with, if you want me to end today's discussion over here, and I need a this confirmation from everyone, Santosh. If everyone confirms that they want me to stop here only, then I don't have any problems. Then we can again discuss same things tomorrow as well. If you feel that it's a very high level of download, then I can pause here only. That's fine. See, it's not on me, it's on all of you. If you feel that we should stop here only, then we can stop. It is all about you. If all can confirm me in session, yes. If you want me to close the discussion here only, then I'll close it. But if you guys can text me in chat, so I'll take it. Your confirmation means also your confirmation as you want me to close the discussion here for today, so we can again discuss the same thing tomorrow. I'm okay with that, but I need a confirmation from you all. I can understand, Vivek. If you agree with Santosh, then Santosh want to take a means close the discussion today here only at this point, and we can again revise and connect tomorrow, and we can discuss on same topics. If you feel that everyone is agree with this, or if you agree with this, just text me in the chat. Quick. Come on guys, text in the chat if you are agreed to take a break over here, so we can connect tomorrow. I'm okay with it, but I need a confirmation from everyone. Quick. Just say it yes. If you are agree, then say it agree yes, whatever it is. I need from everyone. Come on guys. Do fast. I have received messages from only 4 people. 5. Other guys, please confirm, because we'll decide on the basis of that only. Okay, 6, 7, 8. Other 4 people, come on. If you want me to close the session today here only, then just say it yes, then we'll close it out for today. Okay, I have received maximum yes. So it means most of the people, they are agreeing in an agreement.